If I could go back in time, the first thing that I would tell my younger self with regards to trading is, your biggest enemy is not the market, it is you. Imagine having a time machine that could take you back to the start of your trading journey. What would you tell yourself? What mistakes would you help yourself avoid? Well, today I'm firing up that time machine to share with you the 5 important lessons I learned over 5 years of trading failures. These aren't your typical trading tips. They are the game changers that help me to overcome my biggest trading enemy, myself. Hi, my name is Dennis Kirui, and I'm a full-time swing trader with over 10 years of trading experience. I started my trading journey with $50 and grew my skill into managing $96,000 in managed capital. And all this while I was trading part-time. You'll find the links to my verified track records in the description of this video below. If I could send a message back through time and tell my younger self, slow down, trading is not a sprint, it is a marathon. So in my first journey through the trading time machine, I landed in August 2013. The scene before me was all too familiar. A younger version of myself, and my eyes were glued to the screen, and I was frantically opening and closing trades. I watched as this eager trader, me from the past, kept jumping from one strategy to another, applying every tip that I was learning online without fully understanding them. I was driven by the dream of turning my $200 into millions. This version of me was headed straight to disaster. And by October 2013, he had lost 92% of all the money that he had deposited into his trading account. In this era of my trading journey, I had no clear strategy. I was risking 10% per trade. I was using painfully tight stop losses on my trades, and I had no idea how to calculate the correct trade size or position size. Looking back, it was like watching a car going towards a cliff with no brakes. But before leaving this time period, I decided to leave a note to my younger self, a note outlining the importance of building a solid foundation. It detailed the need to learn clear entry and exit rules, understand how to calculate stop losses based on the market's volatility, using tools like the average true range indicator, and most importantly, to reduce my risk per trade from 10% per trade to 1% per trade. This note, if heeded, would allow me to be able to survive long enough to be able to find out what really works in trading. Now, before we jump into our next time traveling lesson, I want to share something crucial with you. If you are serious about avoiding my trading mistakes and fast-tracking your trading success, I've got a free video training on the 7 steps to financial freedom through trading. This is not just theory. It is the exact roadmap I would wish I had when I was actually starting. It will show you how to build a solid trading foundation and avoid the pitfalls that cost me years of pain and struggle in trading. Don't waste time making the same mistakes that I did. Sign up now using the link in the pinned comment of this particular video or in the video description below. Now let's fire up our time machine and see what other lessons we can be able to learn from my past. The next stop in my time travel journey taught me a hard lesson. I arrived in 2016, a point where I was following all my mentor's advice without question. For almost 5 years, I did not backtest any of the strategies my mentor taught me. He said backtesting was biased, and so I believed him. And during those 5 years, I barely broke even. And I thought that slow progress in trading is normal. I trusted my mentor completely and never verified if the strategies he was teaching me actually worked in the markets that he said they would. But in 2021, I finally decided to try backtesting, and the results shocked me. Some markets that I was trading for years didn't actually have a profitable edge. The lesson: never trade a market or a strategy that you haven't tested over at least the last 4 years and over at least 30 plus trades. As they say, trust but verify. My next time traveling stop was in 2018. I landed and watched myself make a decision that I thought at the time was very smart, but ultimately would lead to disaster. And so I had the brilliant idea: just stay up late, wait for midnight, then place your trades just when the market opens for the next trading day. And for 6 months, I placed trades just before going to bed. The result: I faced one of my worst losing streaks ever. I lost 17% of the money on my account and only had one winning trade during that time. I was trying to catch every possible trade, even if it meant sacrificing my sleep and trading when I was not actually alert. What I learned was that missing some trades is okay. There are always more good trading opportunities ahead of you. The key is that you need to ensure that you only trade when you are the most. Wake up early, freshen up, and place trades when you are fully awake. It is less stressful and you will make pure trading mistake. My time machine next took me to 2020, where I discovered that sometimes when you are in a role, it can actually be leading you straight into a wall. So I arrived at the end of the first quarter of 2020, and I witnessed a version of myself riding high on his recent success. In those first 3 months of 2020, my account was up 20% in profit from my starting account balance for that particular year. I felt invincible, like I had cracked the code to trading profit. But then, for the next 19 months, I watched in horror as I lost almost all of those profits. The problem was that I didn't know how to identify when the long-term trend of a particular market actually changes. As a result, I kept trading against the trend and consistently kept losing money. At the end of all of that, I learned the importance of using indicators such as the 5 and 21 period exponential moving averages on the weekly chart time frame to be able to identify when the trend of a market actually changes. The key is that you need to always ensure that you trade along with the long-term trend of the market, not just the short-term momentum. It's like swimming with the current instead of against it. You will go much further and with less effort. And in my final leap through time, I decided to go back to 2013. I landed in a period where I had just learned about entry patterns like the pin bar strategy. The excitement in my younger self was overwhelming, but so was the anxiety. I watched as my younger self became addicted to checking for trade setups all through his day. I was constantly on my phone, eager to spot the next trading opportunity. And sometimes, impatience got the better of me. If, for example, I saw a signal forming on the 1 hour time frame, and it looked like if this candle closes, this one will be a pin bar. So, because of that, I'd jump in even before the candle actually closed and place the trade in anticipation this will close as a pin bar and I'll be in the trade early now. But unfortunately, the candles usually didn't close as expected to form my pin bar. And as a result, most of those trades actually lost me money. My eagerness to trade and constant market monitoring was leading me to make poor trading decisions and caused me unnecessary stress. And I learned 2 crucial lessons from this. First, never enter a trade based on the assumption of how a particular candle will actually close. Wait for confirmation of the entry signal after the candle actually closes. Second, remove all trading apps from your mobile phone. Constant market monitoring will only lead you to overtrading, blowing up your account, and unnecessary stress. Instead, analyze the market for a maximum of once per day, early in the morning, and then go on your way and focus on other areas of your life. Good trading opportunities don't come every day, and that is okay. If you want to learn how to spot profitable trades, then click on the video on your screen. You will learn a technique that most successful traders use to identify high probability trading signals regardless of the market condition. So see you in the next video.